Hey everybody, so it's been a while since I've made a video, but I wanted to highlight some of the bank sectors and just kind of financials in general because we're going to go into earnings season here for banks soon, and that usually happens around the middle of the month of the new quarter. So we're going to start with XLF, and if I'm looking at XLF, I'm just going to zoom out here. So we've been moving in this channel for a while now. And we're just starting to break out of this channel a little bit, as you can see. So right here, we broke underneath that trend channel, and then we made it back up, and now we're just kind of starting to mess around here. So let's introduce the moving averages. Let's look at the 1 year time frame. And if we're introducing the moving averages here, you can see that we basically closed over the 200 moving average today by literally a few cents. But we actually bounced off the 20 MA here, which is 3804. So you can kind of see that we're underneath the 50-day moving average here. And in that 1 day, so on the 31st, we basically broke below the 100-day moving average and the 50-day moving average. So banks were definitely selling off. So this is definitely something to look out for. Are we just selling off so that they could buy back in around earnings, or is something a little bit more mischievous going on here? So let's just look at the different banking areas. So let's look at Bank of America here. Now, when I zoom out on Bank of America, I notice we've mostly been moving within this trend channel here that I've drawn right here. So right now we're kind of over that. So is it fair to say Bank of America has been bought pretty severely? I mean, you can see here that this has basically been nothing but a serious uptrend since 2020, and now we're starting to retest the top of this trend channel. So are we going to fall back within this trend channel? I mean, that's something we're going to have to look out for. So let me go on the 1 year, and let's introduce the moving averages. So you could see since February, we've been selling off pretty badly. And then you can see that in recent days, we've been selling off pretty nasty here too. So you can see when we fell, we tried to make it back above the 50-day moving average, but this is a very clear rejection of the 50-day moving average. And we plowed through the 200-day moving average, the 250 and the 20, and now we're just below all the moving averages right now. And you can see there's this little gap right here. Do you guys see that? It's right at around 39.64. So I do think in the coming days, if we do continue to sell off here on Bank of America, we could go and we could fill that gap. And then what happens next, I'm not too sure. But just looking at this price action here, we double topped. So let me just draw a trend line right there. We double topped and we made a higher low. And we rejected the 50-day moving average and we fell through the 200, the 250, and the 20. So thus far, I wouldn't say it's looking too good on Bank of America. Now, is that going to reverse come earnings? So earnings for Bank of America are probably going to be, sometime in the middle of April. Last year was on the 16th or 15th. So yeah, probably middle of April. So definitely something to watch out for. And maybe we could get back in that trend channel, like I said. Or maybe we bounce off the top of this trend channel. Who knows? So we'll just have to wait until earnings to see what happens with Bank of America. If we look at JP Morgan, I mean, this thing has just skyrocketed since 2016, and it's just been going up and up and up and up. And after 2019, it fell pretty hard, and then since that, it's just been a rocket ship to the moon. Literally, made its top at 173, and since we hit that top, we've just been selling off pretty darn hard here. And we're actually below this 2019 area where we peaked out. So let's look at the yearly and see what's going on here. So one thing that's very clear to me here is we have a top right here. We have a lower high, another lower high, another lower high, and a lower low, a lower low. Are we going to draw out another lower low? So this is something we're going to have to watch out for as well. And we're going to see during earnings, does JPM tank or does it skyrocket? So we'll know. I mean, if this actually becomes a lower low or if this becomes a higher low, and then we start reversing. So right now, what's pretty clear is you see this major gap here. So maybe this gap could get filled when we get bullish, but thus far we haven't filled this gap. We haven't come back up to fill this gap right here. And if we did want to fill this, this would be all the way at like 167, 168 ish. And we can see right here that a reject off the 200-day, and then a reject off the 50-day, and a break below the 20-day. So right now, JPM, it looks pretty bearish. Now let's just draw this trend line here, see what's going on. I'm going to remove the moving averages. And yeah, it's pretty clear to see. It's just been zigzagging down this channel here. So do we make that lower low? And if we do, where is it going to be? Well, if we do make that lower low, and if earnings do come out to be bad, then I would expect the lower low to probably be maybe right around here at 123 possibly. Or it could hit the bottom of this channel at around 118. So that's all possible. So we'll watch once earnings comes. Wells Fargo. Now Wells Fargo doesn't look as good as these other banks. I mean, we'll zoom out here. The price action is pretty crazy. It's just been going straight up here in 2011, and then in 2019, straight crash, and then it's skyrocketing back. Now it's looking like it's moving in this trend channel right here, but it's getting pretty close to the bottom of this trend channel here, and we'll see if it breaks underneath or if it continues this path. But if it does continue this path, then I would think this right here is going to be a pretty serious resistance right at around 54.64. And you can see this wick right here, yeah, right around 54.40 actually. So you can see that wick, that rejection. Now let's look at the 1 year. Look at the moving averages here. So what I can see right away is we have this top right here, and we have a lower high. We have a rejection of the 50-day moving average right here. We tried to retest, and we had another rejection of the 50-day. Now we're having a very strong sell-off. We broke below the 100-day. We broke below the 20-day. We broke below the 200-day. And intraday, we broke below the 250-day. And we're closing slightly above that, as you can see. So if we do hit the bottom of this trend channel, it'll be around 45.63. So you could see something of a double bottom here, possibly, if we do continue to sell off. So like I said with the others, we'll know once earnings comes in how these are all going to play out. So Morgan Stanley. So if I zoom out on Morgan Stanley, we've been having a hell of a rally since 2020. But you can kind of see that this is a channel that we've been moving in. Now we're getting dangerously close to potentially breaking underneath this channel. So let's look at the 1 year. Let's introduce the moving averages. See what's going on here. So you can see we hit the top of this trend channel. We seriously skyrocketed down through all these moving averages, retested the 250-day moving average, and then had another serious reject here. So If we're retesting the bottom of this trend channel again, it will be around 83.70. So thus far, it's not looking too good. It almost looks like it's rolling over here. So if we just zoom out, look at the max chart, then yeah, that's what it's kind of looking like. It's forming this hill, and where does this hill bottom out? So we'll see. Is this the bottom right here, where this bottom of the trend line is? Possibly, or possibly not. And if we're looking at the 5-year or the weekly chart, then you can see that we rejected the 50-day. And maybe we can make it all the way down to the 100-day. Who knows? So let's look at Schwab. So Schwab's been doing pretty well. I mean, you can see basically since 2020, it's just been moving sideways a little bit. And then finally broke through in the later half of 2020. And it's just been going straight up in this predictable trend channel. And we see a very recent strong sell-off. So let's introduce the moving averages. Now you can see this very clear double top. So double top, a reject, and then a knife straight down below the 20, below the 50, below the 100, even below the 200. And then more recently, we had this rally back up, but we made a lower high, and then we had some resistance right here at around 93.11. We actually double topped here, and then we had another strong sell-off that's taking us below the 50, below the 100, below the 20. Now, are we going to go back and retest this 200-day? So that's a big question. And we'll know a little bit more when we see the earnings. If we do continue to sell off, we could hit the bottom of this trend channel again, which would be around 77.67. So we're definitely going to want to pay attention to the bank earnings because a lot is riding on these earnings. Because as you can see in the financial sector, we're selling off pretty hard recently. Lastly, I just wanted to take a quick look at tech and what tech is doing. So what we can see is that recently we had this massive rally. We rejected the 100-day. We're back underneath the 200-day. And we almost fell underneath the 250-day. So normally when you see a massive move like this, it starts to get digested and you start seeing some sideways movement. So are we going to see that sideways movement for a little bit? And if so, how long? And what is the likely range? So I would think that maybe this 100-day moving average might act as resistance for a little bit longer. And maybe we might just move between the 50-day and the 100-day. And that could just be like this sideways motion that we move in for a while. Or if until earnings comes around. And if earnings comes around and it's good or it's bad, that's going to dictate if we rally, if we have this uptrend, downtrend, and then a rally, or uptrend and a further downtrend. So I think we can move sideways for a while until we see earnings. And go and look at SPY. So when we look at SPY, I think the big thing to look out for on SPY is that we made it over the 100-day moving average. But if we see continued weakness in the bank stocks, then I think we could fall underneath the 100-day. And then you could see potential movement between the 100 and the 200-day moving average. So we could see like a potential 2% range, like an $8 range of movement. So like I said with QQQ, when you see a move like this, you're generally going to see it digested. And we're going to be moving sideways for a little bit. And then earnings are definitely going to make a very big difference, especially the bank earnings, on how SPY is going to perform. Now, generally what I see around earnings season is, like the banks rally first, and they usually have like the sell-off near the end of the month, of the prior month. So, they sell off end of the month, beginning of the new month, you start seeing banks rally again. And then you see tech kind of take a back seat. And then once the banks rally and, they skyrocket or whatever, they sell off. And then you see tech rally. and then it kind of goes in that order. So we'll see if that happens again, and if seasonality is going to prove that the tech stocks rally hard in April. So that's all I have for today, and I hope you guys enjoyed this overview. And stay safe in the markets.